This video will provide a walkthrough to the solution for exercise 13-7, which focuses on accounting for bonds with detachable warrants under ASPE, specifically using the residual and zero equity methods. Here's the data for our problem. Brown Lesh Inc. issued $6 million of par value 5% bonds at 99, and one detachable warrant was issued with each $100 par value bond. At the time of issuance, the warrants were selling for $5. And Brown Lesh follows ASPE. Our requirement for this problem is to prepare the journal entry for the issuance of the instrument for both options allowed by ASPE. Under ASPE, there are two methods available for accounting for bonds with detachable warrants: the residual method and the zero equity method. Under the residual method, what we'll do is calculate the amount that should be allocated to the warrants, which comprise the equity component, and the remainder or residual will be allocated to the debt. Let's start with the easy item, which is cash. The company will receive $5,940,000 calculated as a $6 million par value times 99% or 0.99 because the bonds are sold at 99. Next, we'll calculate the amount that should be allocated to the equity component of the stock warrants. In this case, we want to know how many bonds there are and multiply by the warrant price. Since the total par value of the bonds is $6 million and each bond has a par value of 100, that means there are 6,000 bonds. And if the warrant price is $5 each, that's a total of $300,000. So the company will credit contributed surplus for stock warrants for $300,000. The remainder then, or the residual, will be allocated to the bonds. So the company will credit bonds payable for the difference between the cash received and the amount attributed to the equity component of the instrument for $5,640,000. That's the residual method. Under the zero equity method, there is no amount that is allocated to the equity component. Therefore, the entire amount of the cash received is allocated all to the debt component. So the company will debit cash and credit bond payable for $5,940,000. And that's it for this question.